Today is Tuesday, May 31st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the financials this morning, Alan, there's continued talk about how much the Fed will increase rates in 2022. Can the Fed hike its Fed funds rate by 50 basis points every policy meeting this year, as Fed Reserve Governor Christopher Waller indicated is possible?
He made those comments, and I do not think that the Fed will be in a position to hike rates by 50 basis points at all of the meetings this year. It does appear very likely, though, that they will raise by 50 basis points at the June 15th meeting and then another 50 basis points at the July 27th meeting. But I think by smaller increments later this year, and even the minutes from the recent Fed meeting indicated that they may pause rate hikes later in the year. So no, I do not think that we will see 50 basis point hikes at every meeting, as Waller had indicated.
And let's speak to the dollar index. Will today's gains in the dollar follow through?
No, I do not. I think the dollar is basically responding to Waller's comments, as hawkish as they were. So I do not think the dollar will continue to advance this week. In fact, I believe the gains that we are seeing today will probably largely be given back today, and if not today, in the following days this week. So no, gains will not be extended in a dollar. In fact, interest rate differential expectations have recently just turned neutral for the foreign currencies.
Finally, Alan, what are the potentially most market-moving economic reports to be released this week in this first week of June?
Okay, well, first of all, on Wednesday, we'll have the Fed's Beige Book. That is to be released in advance of the upcoming FOMC meeting. But probably more important than that, at the end of the week on Friday, we'll have the employment numbers. And right now, the consensus view is that non-farm payrolls will be up 325,000. My belief, though, is that these employment numbers and the economic numbers this week will probably be weaker than expected. In fact, that has been largely the case in the last several weeks. So those are the important reports for this week, but I believe the numbers will overall come in weaker than the consensus estimates.
Thank you, Alan. Steve, since February, July soybeans have traded between $16 and $17. Last week, July traded over $17. Why? And what is the next price outlook for soybeans?
I think last week the market was looking at record demand for U.S. crush and U.S. export, especially starting in August 1st. And I think the market also was concerned about some lower acres due to wet weather across the northern plains. We're settling back today, I think, because number one, I think that the demand market like these need to be fed every day, whereas weather markets don't need to have that much news. And I think we're seeing some liquidation because the 2-week U.S. forecast looks pretty good for crops, and we don't see any signs of any long-lasting dry or hot weather.
Steve, since late April and early May, July corn and July wheat have traded lower. Why? And do you feel this trend will continue?
The headlines have been consistent in that it's either the UN or Europe wants to convince Russia to open up a corridor for Ukraine exports of corn, wheat, and sun oil. Up till now, Putin has said that he will not open a corridor unless the West drops all sanctions against Russia. This week, though, he's kind of hedging his bet a little bit about the humanitarian part of it. But Russia continues to bomb major cities in eastern Ukraine. The president of the Ukraine does not want to open up the corridors and take mines out of the water, fear of an amphibious attack by the Russians in their coastal areas. So I think the market also is looking for demand. Corn probably a little bit less because we think the exports are going to be better, but we're still not competitive in the wheat market as far as buyers are concerned. So this trend will continue until the weather changes.
And Steve, in regards to the war in Ukraine and the upsetting of the flow of food exports from the region, what is the latest on the West's attempts to persuade Russia to open Ukrainian food exports?
Well, I think the market is starving for Ukraine exports. There's concern about food shortage crises, especially in Africa, but also concern about just what inflation might do here to the price of food and fuel, as long as the Russians are not allowing Ukraine exports. Also, Europe is starting to ban Russia oil imports, which had crude oil testing $120 a barrel today. And so I think that as long as the war continues, and I think it's the 103rd day, that you'll still see these inflation concerns, you'll still see higher prices for food and fuel, and I don't think there's going to be any release of sanctions against Russia or any Ukraine exports well into 2022-23. So again, I think the market is concerned about higher food and fuel prices cutting into U.S. consumers' disposable income.
A bad situation. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.